Good afternoon, traders and investors. My name is 𝗧𝗴𝗀 and I'm the Senior Strategist for 𝗧𝗴𝗀𝗲. Today is the 8th of August. It's a Sunday, and I'm doing my week review ahead of time. I want to prepare you for the week ahead. Usually I do my videos Monday morning, but I decided to step back a little bit and kind of give you a broad view of how I go through my market analysis on Sunday. Why? Because it's really important to get a good feel for what the market's going to do over the next few days, go through the analysis, go through all the reports, and kind of go through everything that's on the table. So the big overriding concern this week is going to be COVID, earnings on smaller stocks like the mid-cap stocks and the Russell 2000 stocks, and most importantly, inflationary pressure. We got productivity and cost coming out on Tuesday. We got producers price index on Thursday. We've got import and export prices on Thursday and consumers price index on Wednesday. So we're going to know this week, by the end of this week, whether or not inflationary pressure is impacting consumer demand and consumer prices, and by what level the productivity and cost are going up or down. And in light of that, we're also going to get the consumer sentiment report, which reflects on what consumers are thinking right now in their spending. Remember, consumers make up about 70 to 75% of the economy. So it's really important number to see where we are, where we're going, and where we stand. The biggest report is going to be the jobless claims and the PPI and the CPI. So Wednesday and Thursday, and you're going to have to keep an eye on the bond market this week because there's a really good chance it's going to break below the 200-day moving average, which I've been talking about quite a bit, which just or simply tells us that the economy is humming along. It continues to expand. If the economy continues to expand, there's a good chance interest rates will go higher faster than we expected, which was the end of 2023 or beginning of 2024. Now they're talking about winding down the buying program a lot sooner, as soon as actually beginning end of this summer. So bonds are moving lower, which means interest rates are moving higher, because remember, there's an inverse relationship between the bond market and interest rates. And I'm expecting this week's economy to hum along and to continue to show us that the market and the economy is doing well. COVID is a big factor, but it's not as big of a factor that's going to cause things to close back down. Not yet, at least. So at least for now, things are coming along, and the Fed's position is things are doing better than expected. The economy is humming along better than expected, which means we're going to cool off the bond buying program, which means interest rates are going to go higher and bonds are going to be lower, and keep an eye out for the bond market this week. Now, the stock market, the S&P 500, if you will, this is a 3-month chart. As you can see here, it continues making higher highs almost daily. Momentum levels are not in agreement, which means we're going to pull back. And that is in light of the fact, now this is the mid-cap, all right? Notice the mid-cap not really going higher. This is the S&P. Look at this, just continues. Look at the 6-month. Just goes higher and higher and higher. Starts off 378, now at 445. But look at the mid cap. I mean, it's been 507, 501. I mean, sideways. And the Russell 2000, same ways. Very little directional bias. And what's that telling me is that the only stocks that are really rocking and rolling and continues to move higher are the top 50, maybe 40 S&P stocks. The rest of the market is congested. If it wasn't, the mid-cap 400 wouldn't look like that, all right? So let's look at each individual sector. There's 11 major sectors, so I want to kind of go over them and kind of get a feel for where things stand. The real estate sector is looking really good. It is going higher, but notice volatility. Notice at none of the time over the last May through June, June through July, July through August. Notice volatility is not going higher. That means that this trend can actually continue. Financial had a really nice pop-up because it confirmed on Friday that the employment data that we saw from ADP is not, it was just a fluke, and the economy is humming along. This was very positive news for the financial market and bearish news for the bond market because there's an inverse relationship. Remember, if interest rates go higher, it's good for financial stocks. but it's bad for the bond market. So again, there's that. So you could see here a nice little pop from a nice congestion. I told you guys about a week or two ago that I think financials are going to run up again. Now, technology is very interesting because technology looked for a little while like it was overdone. But again, it stood back up, and again, volatility is low, which means we could go higher. Be very, very cautious with technology. I mean, be very, very, very cautious with technology because technology, especially the top 100 stocks, are really overbought. The communication sector looks like it can go higher, but I would be very cautious on large cap tech and large cap communication. Very, very cautious on that. Healthcare is looking pretty good, but I think we're going to congest for a little bit. I think this whole the fear of the Delta variant is kind of running its course right now because even though people are getting hospitalized, it doesn't look like people are dying. The death rates are substantially lower. So healthcare, question mark, especially over the next few weeks. Let it cool off. Maybe we'll have another upside, but I think for now we have to have a little choppiness in healthcare. Now, industrial. I've been talking about industrial. Remember I told you about a week or two ago that I think in material and industrial are going to have another leg up? I'm seeing it right now. Definitely seeing it in basic materials, seeing them in some industrial stocks gaining some strength. Utilities are overdone. And remember, there's a strong correlation between utilities and the bond market. Don't think we're going to see a lot more upside in the bond market over the course of the next week or two. The bond market's overdone. I think we're going to go down, and I think utilities are going to go down with it. Let's go back to our chart. The remaining sectors, consumer staples looks like it's choppy. Consumer staples was also a little bit extended, if you will, a little bit in fear mode. So it got a little choppy because of COVID, but I think we're going to see a little congestion. Consumer staples, I think we're going to see continued sideways. I am skeptical about consumer discretionary and consumer staples. I think consumer stocks are going to kind of drift for a little while. And energy also a little bit of sideways, maybe a little bit of higher pressure, but don't look out for the energy market to be the big winner. Where I think the big wins are going to be, I think financial, I think industrial, and I think basic materials are going to be really, really, really good winners over the next few weeks, especially with earnings on the smaller stocks coming out. Now, in terms of the overall market, notice there's 160 stocks making 90-day highs and only 52 making 90-day breakdowns. That means that the bulls are overwhelming the bears by a good margin, and the market is bullish right now. In terms of the top S&P 500 stocks, well, they're not tech. Look at this. Fortinet, Gartner, Nucor, Albemarle. They're basic material, industrial, healthcare stocks, and I think that's where the action's going to be right now. I think industrial and basic material are going to pick up again, but we are seeing some love from cloud stocks because remember, if COVID hits, Zoom, Peloton, all those companies that are heavy, driven by stay-at-home consumer internet demand, if you will, Adobe, Autodesk, all those stocks that people use when they stay at home, and the people do work from home and use engineers, graphic designers, and then there's also people who play computers, those Netflix watchers, people who watch Roku and Hulu all day long. I'm talking about the stay-at-home stocks. If they pop, we're going to see some upside from those stocks if COVID increases. And therefore, there's some sectors that are showing some potential there. So I've got 3 stocks, actually 2 stocks and 1 ETF that I'm really, really liking right now that is on my radar. So let's start off with Global X Computer. Cloud, we talked about this last year. This stock heats up when there's a potential for a stay-at-home environment again. And boy, oh boy, it made all-time highs on Friday. That's because COVID is heating up. Remember, cloud companies like Zoom, they keep their servers within REITs. And these xCloud computer REITs, these ETFs, they can really start heating up when there's fear that there's going to be another lockdown or a major, not even a lockdown, when people are working back at home. So cloud ETFs, I like how congestion is going. I like how it's flat. And there's a good chance we'll see this go up from $29.30 maybe to $32, $33 if we get another run up in the cloud computing ETFs. If you look at it over 9 months, it's congesting. It still hasn't taken out its high. But if look at last time it peaked out, February. Remember when we had a real big fear of the lockdown? February. Looks like we're going up for another round. And I like the fact that we've been mostly sideways for the last, most of this year, for the last several months. We're right now in the 8th month, and we stopped trending in the 2nd month, in February. So 6 months of congestion. I think we're going to go up for another move up. Next one, 𝗧𝗴𝗀. 𝗧𝗴𝗀, this is a infotech stock. Info technology, management consulting technology services, outsourcing organization. Outsourcing, folks, outsourcing. Right now, there's a bottleneck in employment. Outsourcing is huge. And look at the run up on this, making an all-time high, congestion, nice little ascending triangle with a little flat top. Oh, this looks beautiful. Really likes how it looks right now. And last but not least, First Industrial Realty Trust. What do they do, you may ask? Let's take a look. Self-administered, fully integrated real estate trust, industrial real estate. Folks, industrial basic materials, they're not going anywhere. Look at this stock. There's a reason why it had a nice little run up, and I love how it's moving higher, but volatility is not increasing, which means it can continue moving higher and higher and higher. So I really like First Industrial Realty. I like the cloud, the CLOU, Cloud X Cloud Computing ETF, and this 𝗧𝗴𝗀 place, ACN. Now, before I let you go and spend the weekend trading and hopefully making money on these picks, I've got a few things to tell you. Be very cautious of if COVID picks up, and keep your eye on the small and mid caps. And if they start trending again, if the Russell starts trending, and if the earnings are really good and it takes out the 233, 234 level, we can see a real good run up in the Russell. And on the mid caps, if we take out the 504 level on the MDY, there's a good chance we can have another run up. Now, before I let you go, I've got something important, timely, something that you really need to pay attention to. What if I said there's a way to potentially tell when a stock could explode higher and the next profit opportunity might be around the corner? How, you may ask? Right? You want to know how. It's a legitimate question. Well, there's a secret stock calendar that has predicted dozens of gains over the past decade with nearly 100% certainty. That's right, nearly 100% certainty. It doesn't give a rip about news, earnings, Federal Reserve, or what anyone has to say. The stocks tend to explode on the same day almost every year for 10 years in a row. You do not want to miss out. And when the traders know these dates, they can potentially bank big profits that you don't want to miss. So instead of trying to pick stocks in overbought and choppy markets with very interest rate sensitive sectors right now, try trading stocks that have a 10-year track record for moving higher during the special prime time window. Take the guesswork out of the market and gain an unfair advantage for yourself and your family. Click on the link below and unlock this little known strategy right now. And folks, make sure to like this video. Stay ahead of the market by being the first to be notified when I post a new video just for you. And have a great week ahead. Keep your eye on earnings and the COVID situation around the country and around the globe. Bye. I'll talk to you guys later. Take care.